The State Farm rate increase is supposed to be one of the larger increases that we're going to see in 2023, although they haven't announced it yet. Thomas Wilson, the CEO of Allstate, had a lot to say about how State Farm's history has been. And based on the history and the losses that they've had, they do expect a very large rate increase along with Allstate. Now, Allstate's actually in the news for having the largest increases 2021 and 2022. They've had some pretty big losses that are almost unrepairable. So let's dive into it because there's a lot of things that are affecting State Farm as well as Allstate in these scenarios. Let's let the cat out of the bag right away. State Farm, I expect to have a rate increase in 2023. There's no way that they can lose over $1 billion from this third quarter to not survive and keep going. Now, will they survive? Yes, they're a massive company. They can cut costs. They can do whatever they got to do to make it work. That's not the problem. The problem is they're going to be unprofitable, which is a huge problem, not just from State Farm. You got to think, State Farm isn't just one guy sitting in his office saying, oh, well, I'm not going to go on vacation this year. It's shareholders. There are thousands of people that have invested into this company, and they expect returns. They're not going to get them this year. So what's happened? Bear with me, I got a page of notes here because there's a lot of numbers, but essentially they've lost $4.6 to $4.7 billion in quarter three. Most of this is due to a few things. It used to be inflation, but inflation turned into the cost of car parts. When the cost of car parts were delayed, it was the time and the labor. And now what's happening is they're actually having an issue with people getting injured more often. The severity of the injuries, the delay of claims are causing lawsuits. And the lawsuits are causing a higher cost for a claim that they would have paid, but they just haven't gotten to it. Whose problem is that? 100% theirs, because they need to have those things in place to take care of the customers that they've taken on. I get it. They didn't plan on or expect a lot of the things, Hurricane Ian and all of those things to pop up, and they've actually had larger losses on their life insurance policies because 20% of their business is life insurance. So between all of those mixes of losses that they've had, they weren't planning for it. I personally, running a business myself, wouldn't plan for that either, just because if it hasn't happened in the last 3 decades, why would it happen now? But it is. What we're seeing is a huge loss of just profits going out the door. Commonly, you would see State Farm would actually technically be a profitable company even with these losses. So what you see in the news is that they lost $1 billion, they lost $2 billion, whatever the case was, but they still make almost $1 billion in profit on top of that. So even though all these losses are here, they take the money, they finance it, they invest it, and they grow their stock and they grow their company. So even though there's a lot of negative around it, they're actually positive. It's getting to the point where they're starting to lose that income to where it's not as profitable as it should be. So let's compare. We said 4.6 or 4.7 or 4.8 billion. It's a lot, right? There's 4-point-something billion dollars this last year in 2022. The last time they lost anything close to that in their history was 3.4 billion. So almost a little over $1 billion more from 2005. And that was Hurricane Katrina. That was the largest disaster that we've ever seen. That hasn't happened this year. So even though that we've had smaller incidences, it's a combination of all of those things that we mentioned earlier, along with the weather and the black swan events, as we call them, that they're starting to see. State Farm has held their ground because they actually lowered their rates in 2020 when COVID started to hit. Because of that, they've tried to hold that rate as steady as possible. They can't hold it anymore. So we're expecting, and even Allstate is predicting, that in 2023, you're going to see State Farm's rate skyrocket. Now, what is Allstate doing to do this? They're clear out in the open, raising rates no matter what. They have a clear goal to the factor that they are going to raise the rates until they hit their loss ratio that they want to do. It's called a combined ratio. That's their homeowners insurance, their auto insurance, their annuities, life insurance, all of that type of stuff. That total loss ratio is supposed to be at a specific number. And that goal needs to be met in their case. So they're going to raise those rates. And I have a feeling State Farm's going to follow that same path to where they have a certain goal of their loss ratio or their combined ratio to where they're going to raise those rates incrementally until they hit that. They don't care if the economy gets better. They don't care if the economy gets worse. They just need to get back to their profitability state in order for them to be stable. Now, Allstate's actually struggling with a lot more stuff than State Farm because their shareholders, or their stock, so to speak, isn't worth nearly as much. And that's one of the reasons they're raising all of their rates to come back. What will that cause for a lot of agents? It's going to hurt a lot of people. Allstate has slowly started to go independent, where they let independent agents work with them. The problem is they're now in a market that compares mostly off of price. Should agents base it off of the person in that? Yeah, my agency does it that way. But for independent agents, they mostly, a lot of them do price shop. What do you got? What can I give you? Who's got the cheapest? And they shop it across 10 or 15 different companies. They pick the best one or the best fit, and they plug it in. Thing is, Allstate's raising the rates, so they're not going to be competitive there. So they have to lean on to their direct model, where their office and their agent and their brand is the staple. Personally, I got a feeling that's going to eventually fall apart. I hate to say it because I love a lot of the agents that are out there that are doing great. They're crushing it. But I think similar to what Nationwide did several years ago, they completely wiped out that staple model and went all independent. Now, that is a great move, although honestly, if I were just throwing an opinion out there, I would say in the next 5 to 7 years, Allstate starts to do more of that because Nationwide did great with it. They're actually one of the top companies in that independent industry. So going back to State Farm, some of the notes I have to read because it was just so many numbers I couldn't memorize them all. According to a separate article from SB Global, they said that their loss ratio from quarter one of 2022 was 70.1%. They've increased from the last quarters over quarters and year over year, almost 22% in losses. And that was because of what we mentioned earlier. So how do you save money with State Farm? If you're with an Allstate or a State Farm agency, you're going to start seeing Allstate actually shift their model, and we'll go to State Farm in a second. But Allstate is actually doing a lower product offering. They're actually lowering the complexity of their policies, which is actually a good thing. However, it stops a lot of the claims. So they're going to tier it kind of like you would at a casino. You change the numbers of the slot machine to be in the house's favor. They're going to tier it and likely will probably position it so that the majority of the claims that they would have had to pay aren't typically covered. You'd have to pick and choose that. That leaves it into the hands of the person purchasing that policy, but a lot of people don't understand what they need and don't. Allstate knows what their claims are. They could adjust the pricing, but that would have to adjust it across the board. So what they'll do is they'll remove those pieces and allow you to add them back on at a premium. The premium will be higher for those that think they need it, so you're going to pay more for that scenario. The reason they do that is because most people just won't pick it. I'll give you an example. We do a lot of homeowners insurance here in Michigan, and what we find is almost nobody chooses water backup. A lot of people don't realize that's part of your policy that's excluded. It's not a covered incident if water backs up from your toilet or backs up from your sink or whatever the case is. You can add that coverage, and we typically do as a default, but most customers will just naturally not do it. A lot of agents won't add it because it's an extra cost, and they know that if they're trying to compete on price, which they should learn to do better, but if they are, then they're not going to necessarily win that type of business. They don't have that confidence or that experience to where they are knowledgeable in the industry. So what's really combating the industry that's helping people the most? It's called UBI, usage-based insurance. And what that is essentially those that want to drive based on mileage or want to allow somebody to track their driving to prove that they're in a good location, they have a good driving habit, they're not braking hard, using their phone while driving, all of the things that half of us do. So it is built to catch the ones that do it, and it's giving the discount to the ones that don't. It's not going to be a required piece because it does technically infringe on your rights if they make you do it, although it doesn't stop a company from saying this is the only offer that we have. You either do our usage-based insurance or you don't do it at all. I don't think any company is ever going to do that, but if they did, they would lose a lot of business. To summarize this, I'd like to know what your thoughts are. If you're watching this and State Farm has already raised the rates, because this video will probably be relevant for the next 2 to 3 years, let me know in the comments below what you saw. If you're someone that is shopping and you want to find a better option, I'll put a link in the description below where you can get a quote with people that I work with. Sometimes it's me and the companies states that I'm in. Other times it's people that I know that are really good. Are you seeing rate increases already? I've already seen a few states that have already had increases with State Farm. Allstate has just across the board been doing it left and right, and they're doing it more as they've even stated. But what have you seen out in the market? If this was helpful, give me the thumbs up. If you want to follow more about the topics on this, we will keep following around on different changes in the industry as far as home, auto, business, all types of insurance. Let me know if you guys have questions. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.